Hello and welcome to our McCloud Remedy update. My name is Graham Crossley. I'm here joined today with Jack, who is the Technical Director at MediFinTech. We're just going to go through a little bit about what we've been seeing on McCloud and a few of the other updates that would be of interest. Hoping to keep this one nice and short, around about 30 minutes or so. If we do get time for answering some questions, we will do. But for those of you who put your questions in advance, thanks very much. We've tried to build as many of them into tonight's webinar. So for those of you who are unaware of who we are very much standing up for NHS pension members. We are NHS pension specialists with an excellent reputation and unrivaled technical knowledge when it comes to NHS pensions. We support hundreds of accountants, financial advisors, as well as working with members directly. And we've saved millions in identifying and correcting annual allowance tax errors and errors on also members' pension records. So before we get into the latest on McCloud, I just want to do a quick refresh and just a bit of background of how we got here. So with regards to McCloud, this all started back in 2011 with the Hunt Report, which proposed reforms to public sector pensions as they were deemed to be too expensive. People were living too long and they wanted to extend that normal pension age to state pension age and change the final salary schemes to career average revalued earnings schemes. Now, they specifically mentioned that special protections for members over a certain age should not be necessary. However, in April 15, when these reform schemes were introduced, they had this transitional protection that let older members stay in their old pension schemes. Not surprisingly, younger members were aggrieved, and so the judges took this to an employment tribunal under the name McCloud, which has stuck and which is why now everyone associates it with the McCloud Remedy. Firefighters did the same under the name of Sergeant, but didn't stick as well as McCloud, and this escalated through the courts until July 19, when the government accepted that this discrimination needed to be remedied. So this impacts people who were members in service on or before the 31st of March 2012. There's also a few other people that could have rejoined within 5 years that also get impacted. So that's people who are still working in the NHS, still contributing to the NHS pension scheme, but it also includes people who may not be working in the NHS anymore, or they are in the NHS, but they've opted out of the pension scheme, these deferred members. And it also includes the retired members. So that's people who've retired either on a standard award, ill health retirement award, or even those with spouse or dependent pensions. And remember all those people with transitional protection? Well, they're included too, even if they had full or tapered protection. And there's a lot. So in England and Wales, there's over 1 million members that are impacted by the NHS, by the McCloud Remedy. So what's actually being done to remove the discrimination? Well, first of all, the 2015 scheme itself is not discriminatory. It was this bit, this transitional protection, the bit that said that those closer to retirement got to stay in their 9508 scheme. That has already been removed retrospectively. In its place, you will be given a choice, and your choice will apply to the remedy period, which are the 7 years between April 2015 and April 2022. And your choice will apply retrospectively to the benefits that you built up during those 7 years. You will get to decide, do you want those benefits in your legacy scheme, so the 95 or 2008 scheme, or would you prefer them in the reform scheme? Now, fortunately, you don't have to make that choice and to actually come to take your pension benefits, but there are some important events on the timeline to be aware of. First of all, to get rid of that discrimination and the transitional protection, all membership from April 2022 for all members is in the 2015 scheme. If you had any added years contracts, added pension contracts, well, those would still continue to be honoured, and all of that service you built up till April 2022 would still benefit from increases in your pensionable pay as long as you stayed an active member due to that final salary link. Now, we've just started to see the second part of McCloud Remedy hitting, and this began with the rollback that occurred on the 1st of October 2023. So there was no choice to this. This simply happened. Everybody was returned to the legacy scheme from whence they came for the remedy period. So for all of those benefits you built up between April 15 and April 2022, they have already gone back to the 95 or 08 scheme that you were in previously. If you look at your total reward statement, you'll already see it's updated to April 2022. Now, as a result of going back to a different pension scheme, that has implications. First of all, there are features in the old scheme, features in the new scheme that don't exist in the old scheme. So things like early retirement reduction buyout. So you're going to have options on what to do with those. But one of the key things that we're facing at the moment is the impact on annual allowance. Because each of those pensions grows at a different rate, all of your calculations for those years are needing to be reassessed. And then finally, when you actually do retire, that's when you get your choice. You can decide, do I leave my benefits in the legacy scheme, or do I want to move them into the 2015 scheme? Now, there will also be a cohort of people that weren't rolled back. They retired before the rollback, so they will get a choice between the two options. Now, how will that remedy period be assessed depends entirely of when you joined the 2015 scheme and if you've already started to take your pension benefits. So for a significant majority, those who joined the 2015 scheme before the 1st of April 2022 and didn't take their pension benefits by the 1st of October 2023, well, their pension input amount is based on the legacy scheme, the 9508 scheme, for the benefits you built up during the remedy period. For those who had already taken their benefits by the 1st of October 2023, they're going to get something called an immediate choice of legacy or reform benefits. So they'll get this letter that says, which pension scheme do you want to be in? And then their pension input amount only changes if they choose the old legacy scheme, the 9508 scheme. Now, if you joined the 2015 scheme on the 1st of April 2022, so you had that full transitional protection, if you didn't take your benefits by the 1st of October 23, well, there's no change. You've already been in the legacy scheme for those 7 years, so there's no reassessment that's going to be needed for the remedy period. Now, if you had taken your pension benefits by the 1st of October 23, you will again get this immediate choice. It won't be that immediate, by the way, and you'll get to decide between legacy or reformed, and your pension input only changes if you choose the reform scheme and the pension input amount is lower than you originally had under legacy benefits. So we're starting to see this impact for those people in the top left corner there. So those who joined the 2015 scheme before the 1st of April but hadn't taken their benefits. The others, it will take some time before it gets to you. Now, some members aren't going to need to reassess the remedy period at all. However, they may need to reassess 2022-23, so they're going to have to go through this whole process anyway. Now, when it comes to retrospective taxation, ordinarily, you can only go back for 4 years. But within this process, if you have any decreased tax liability throughout any of those 7 years, you will be able to claim your money back. It's deemed as compensation between 2015-16 and 2018-19, and then a refund for the years that follow. If you have an increased tax liability, so for example, those who have got mental health officer status, those types of people, well, HMRC are only going to collect for the full 4 years previous. So this is if you have an underpaid charge from 2019-20 onwards, you will have to pay. And that's going to be very important going forward as well when we look at some other features of the McCloud Remedy. If you do have a new tax charge, you will still be able to use scheme pays in order to settle that charge for you. You might also be able to use the 2019-20 Annual Allowance Compensation Scheme, which is available in England and Wales if you were clinical in that year. One of the good bits of information here is that the annual allowance is actually not reassessed again when you take your benefits if you were to choose the 2015 scheme. It's just a one-off exercise that we're going through now. So just to give an example of what we expect to see, it's quite spooky, the outcome of this, by the way. So this is a member who had been in the 95 section, and then they joined the 2015 scheme. So it was a consultant, I think it was about 4 CEA points mid-career. And we can see that the pension growth there in the gold is from the 95 section. The purple is the 2015 scheme. So you can see with that final salary linking, we still get growth in the old section because of those benefits increasing. Now, when you overlay annual allowance, all was fine until we started to see the annual allowance taper introduced, but then unfortunately their allowance got reduced and they started hitting tax charges. So this member had a tax charge over the remedy period of £16,265. Now, if we roll back that membership and replay it as if it's only in the 95 section, you can see that the growth is a little bit lower. And as the growth is a little bit lower, the impact on annual allowance taper is a little bit lower. And for this member, they actually fall under the annual allowance for the whole of that remedy period. And bearing in mind, we put this slide together at least 3 years ago. We said a typical compensation amount for the remedy period is going to be about £16,265. Thanks very much for filling in some of the questions before. We've actually done a few charts which we're going to go through, and also drawing from our own experiences of the cases that we've already processed. But the average compensation refund that we have actually calculated is actually £16,302, so very close to the figures that we originally were saying. We're also finding that 70% of people who are processing the RPSS are actually receiving compensation refunds overall for the remedy period. And even as for some person, we actually had a highest amount of £109,000. So if you do have an RPSS and you haven't done anything, you really should not bury your head in the sand on this one and do process this. Now, it's a slightly different picture for the 2022-23 tax year. So that's outside of the remedy period, but because of the McCloud Remedy, it was put on hold last year and wrapped up within this process. We have found that about 54% do have a tax charge, and the average is coming in around £11,433. But still, overall, members are getting money back by going through this process. Now, when it comes to processing this tax reassessment, you need to get some supporting information. Now, the document to do that is a Remediable Pension Savings Statement, or the RPSS. And this document includes the previous pension growth as well as the revised pension growth as a result of being rolled back to your old legacy scheme for those 7 years. Now, the deadline for the scheme to get this to you was the 6th of October last year, and all of the schemes have missed this by a mile. We did start to see some of them going out, and we saw 57,000 also started dripping out from the start of October. However, many of you haven't actually received an RPSS from the poll tonight, and also another poll that we've done more widely. 69% haven't received their RPSS yet. Now, NHS BSA do aim to send out the majority of the remaining RPSS by the end of February. But one of the other worrying stats that we polled people on was, if you've received your RPSS, have you done anything with it? And we found that 40% of those people who had received their RPSS hadn't taken any action. If this is you, I urge you to take action, because in the main, people are actually getting money back from overcharged annual allowance over those years. Now, we do unfortunately have significant amount of errors with the RPSS. We saw a very big issue with regards to 2014-50 data that was on the statements. It used two different data points. One was a recalculated value and one was a static value. And unfortunately, they reissued over 20,000 RPSS. I'm not convinced their fix was the best approach. The way that it was asked for has unfortunately caused financial detriment to a number of members. And this is something that we're actually challenging Department of Health at the moment, because we don't think that some members who have got a charge as a result of this should be liable for that charge. But unfortunately, in the background, we've also identified even more errors. Some are relatively niche and apply to a very handful of people. For example, some choice 2 revocation people, or people like GPs who have hokey-cokeyed, then there's an issue with those. But we are liaising with NHS BSA in the background to sort of identify the impact of those errors so that they can be fixed, and anybody who's had an incorrect RPSS will then get a new one as well. And if you do finally get your correct RPSS, you then do need to process it through this Calculate Your Public Service Pension Adjustment, or the HMRC online digital service. And what it does is it will calculate any repayments that are due for any previously overpaid annual allowance and even lifetime allowance charges. And it will also determine if you've got any new charges for the remedy period and 2022-23. Now, it will also submit details to HMRC to review as well if you actually process this yourself. But be warned, this is over 200 pages in some cases. And one very important thing is you don't have to go and amend your historic self-assessment. One of the common errors we're seeing quite recently is in the panic to sort of sort out the current 23-24 self-assessment, people are also going back and updating their 22-23 self-assessment. This digital service replaces that in informing HMRC, so you don't need to amend your historic self-assessments. Now, you also don't need to do this yourself. They have introduced the NHS Cost Claim-Back Scheme, whereby the scheme can compensate you for any direct financial loss associated with the discrimination. Now, for England and Wales, NHS BSA have specified an amount for this service in particular, where you can claim up to £1,000, including that for professional support with that full HMRC digital service. Now, not everyone that receives an RPSS will need to use the full service. There are some triage questions that will kick you out right at the beginning, so you don't have to go through all of the 200 pages. But if you need the full support, you will be able to claim back £1,000 to Getting Professional to actually do this for you. And it's not just for accountants, it's for anybody that provides you professional support on this. For example, we provide a service. We know that lots of accountants do provide a service, and some financial advisors also provide a service. So the industry has geared up to help you so that you're not alone when it comes to processing these. Now, we have seen some utter disasters from people who actually try to do this as well as their other sort of pension projections themselves. So I just want to sort of reiterate some of the problems that we've been seeing. So, for example, we've seen lots of incorrect tax charges. So people who have historically not used the correct carry forward amounts, or there's been errors on the pension record that they've not known about or even realised that they're paying too much in tax. We have also seen a significant amount of undeclared tax charges. We had one member with over £110,000. They just simply had never really addressed this issue. We've also seen quite a few people who actually have done the taper calculations incorrectly, going back to sort of 2019-20 and prior to that, when the threshold was at 110,000. Unfortunately, what they've done is they've added back in car leases to the threshold calculations, and by doing that they then triggered taper when they didn't need to. And unfortunately, this is a result of some of the big BMA webinars back then, when they didn't, well, unfortunately, they made a mistake. They gave out the wrong information. But fortunately, McCloud Remedy does resolve that. So that should be sorted as long as you calculate the taper and the threshold income, adjusted income correctly now, and don't add in the wrong things again. We've seen people waste hours and hours on using these sort of self-help calculators and online tools and still getting the answers wrong, and not making use of the 2019-20 Annual Allowance Compensation Scheme. So the way that scheme worked, just as a brief refresh, because we had that absurd annual allowance taper in 2019-20, whereby £1 worth of income could give you a tax bill of £13,500. Whilst the government was trying to sort out how to remedy that, NHS England said, well, look, if you're clinical and you have a tax bill, we'll carry the bill for you. Wales then followed shortly after. But the way that the mechanism works is you have to use the scheme pays election, and you also have to fill out a compensation application form. Now, that scheme pays election means that NHS BSA paid your debt to HMRC and then register it against your NHS pension record. Then over the years, it accrues interest based on CPI plus something called SCAPE, currently at 1.7%. And then at retirement, that debt is converted into a permanent reduction from your pension. At the same time, NHS BSA will then also facilitate a second income stream for you that matches the drop in your pension income. The trust doesn't pay your tax bill. NHS BSA doesn't pay your tax bill. They simply compensate you for the loss of your pension income when you get to retirement. Now, I would say go and look on the NHS England website for this, but sadly, as of yesterday, it went down on this page. We've raised it with NHS BSA and also NHS England. If you've still got some of the historic links to the sub links of that site, you will get through, but you can't get through to the main one, unfortunately, at the moment. But the key message here is there is lots of professional support available within industry to have geared up to try and help you through this process. Not just us, lots of accountants, for example, if you look for an accountant who's ideally a member of something like ASMA, so the Association of Independent Specialist Medical Accountants, and there's also the healthcare side of the Institute of Chartered Accountants, England and Wales. There are lots of specialists there and other specialist financial advisors that can also help as well. Now, you do have deadlines. So this is causing a bit of panic, and we're getting lots of worried emails coming through quite a bit. The first deadline is that if you have any new charges between the 6th of April 2019 and 5th of April 2023, then the deadline is the 31st of January if you hadn't already started to take your pension benefits by the 1st of October. So if you haven't had an RPSS, well, don't worry, you have got an automatic deadline, which is 3 months from receipt of that revised pension savings statement. One thing I would say on this, though, we've had numerous talks with HMRC, and I know that the accountancy industry have separately had talks with HMRC, and we've had talks afterwards. HMRC are saying that they're going to be a bit pragmatic on this. If you actually are genuinely trying to do this, then it's unlikely that they actually start to apply any charges if you're a little bit late. If you wait a few years, then I wouldn't be surprised if you do get a charge. But if, for example, you're trying your best to get the information now and you haven't got access to, for example, the HMRC data extract or your that's the key document, then they will show some leniency. Now, if you had already started to take your pension benefits by the 1st of October, then your deadline is actually the 31st of January 2027. Now, the deadlines are an absolute joke. We did actually put forward last year that all members should at least be given this 2027 deadline, particularly with the absolute mess that there is with issuing RPSS. And that's not just confined to NHS pensions. We're seeing it in a lot of the public sector schemes where the scheme administrators have failed to deliver the information that's needed for members to complete the work that they need to do within the appropriate times. Now, one of the key dates that we also have is this mandatory scheme pays deadline, whereby you would need to put in your election before the 6th of July 2025 to sort of share that responsibility with the scheme administrator, which then also means not being liable for any late charges. Now, that's an important deadline, particularly with some of the misinformation that's gone out, and I'll cover that in a moment. Now, if you don't have any tax charges, well, you have got nothing to worry about as far as deadlines go for now, because the deadline is actually the 31st of January 2029 if you hadn't started to take your pension benefits by the 1st of October 2023. And if you had, well, you've got until the 31st of January 2031. It's also worth noting, by the way, if you do submit your return via this, you then have up to, again, 4 years in which to make any amendments if you needed to. Now, what happens actually after you submit your case to HMRC? Well, they will take up to 90 days in which to process your case. And if you have elected to pay some charges directly, HMRC will then notify you after that assessment and ask you for payment within 30 days. You don't need to go scrabbling around now trying to find the money to pay them now. You can wait until you get the notification. If, for example, you are having scheme pays reductions, or if there's a refund due to you, what will happen is HMRC will pass this data to public sector scheme administrators in order for them to facilitate it. Now, this leaves a little bit of a black hole when it comes to private pension scheme pays, because we know there are a number of members who are members of the NHS pension, also have private pensions, and have used the private pension to settle annual allowance charges that were derived from their NHS pension. Now, When I was speaking to HMRC on this, they have said that, well, it will be the public sector pension scheme that facilitates that payment, but we don't know how they're going to make that payment to the private pension. We don't know how much they will refund. For example, are they going to apply interest like they are for direct refunds? Are they going to look at opportunity cost? Well, you need to know what, for example, the unit values were at the point of encashment and what they are now to show you exactly what you've lost as a financial consequence. Or will that actually be part of a cost claim-back scheme, or would it be an automatic process? What happens if, for example, you've transferred your pension to another provider? All of it is very ambiguous at the moment, but we've got a series of questions in with the technical team at NHS PSA, and they're preparing responses at the moment. So as soon as we get those, I'm sure we will and make some announcements ourselves if NHS PSA don't do that themselves. And now the other key deadline that we keep being asked at is about this cost claim back reimbursement. So at the moment, for those in England and Wales, it's taking around about 4 weeks to get monies back, and that £1,000 comes back with a little bit of interest. For any members in Scotland, so SPPA or Northern Ireland HSC, as you might be aware, they actually haven't released any details on their cost claim-back scheme. We have, however, processed quite a few cases from Northern Ireland and Scotland, and what we did to sort of jivvy everything along, we said we actually put in some complaints for the members, and then they came back to say that they were going to be launching this cost claim-back scheme. So we're keen to see what the actual details are going to be for that. I'm hoping they just simply emulate what's going on in England and Wales. Now, one of the things, if you have used an agent or an accountant to submit your case, and you are using NHS scheme pays for an increased charge, you must use a new scheme pays election for individually. You've got to actually send that to NHS PSA. The agent or accountant can't do this on your behalf. Unfortunately, what hasn't helped is HMRC's letters back to agents and back to members have not realised the nuance of this difference between someone applying directly, because if you apply directly, you're giving your individual consent, but if you're going via an agent, you're not giving individual consent, and you do need to have a separate scheme paid election. And they're sending out this letter to agents and accountants saying that you don't need to inform the scheme or make a new scheme pays election. This is completely rubbish, and there's a big financial risk here. If you have this new charge and you've not filled in your scheme pays election, you could end up a year or two down the line having never paid this tax charge, and then if you get assessed, you could be subject to late payments and penalties. I've been speaking with HMRC on this, and they are going to reword their letters that they send out to agents and accountants, and hopefully address the 1,000 or so people that this incorrect letter has gone out to as well. But rule of thumb, if you've used an accountant, used an agent, new scheme pays election form, you have to send it in. No one else is doing it. No one else is doing it for you. Lots of us will fill it out for you, but you still need to sign it and then send it off to the pension scan team. Now, as far as volumes, speaking to HMRC, I'm a bit surprised as to where they're at. So this is as at the 23rd of January 2025, so a week ago. They're saying across the whole of the public sector, they've only had 7,125 submissions, which is shockingly low, I think. Of those, they've processed 23% of them, so there's still quite a lot of them outstanding. One interesting thing, because I asked them, well, how many have actually been submitted via agents and how many have been submitted via members themselves? And there's a different process. So if you do it yourself, it's done digitally. If it's done via an agent or accountant, it's done manually. And 83% are actually doing this themselves. So again, I'm quite surprised at that, considering you don't have to. You're more likely to make mistakes unless you're an accountant as well as a doctor. There are a few of those. But if you're just if your specialty is medicine, well, leave this work to someone who can actually be paid and have your costs sort of reimbursed. So yes, surprising the low amount that people have actually gone via an agent there. And as I say, we do offer this service. whereby we will actually do the whole process and recover the monies for you, help out with scheme pays election forms, help out with the cost claim-back scheme. As I say, we've had a 100% success rate on those. And even on the cases where they initially failed, the manager of the cost claim-back scheme sent us an email saying, oh, this looks like one of yours. Have you got this receipt? And we sent it off to them. So we've got 5-star reviews for everything that we've been doing. If you haven't had an RPSS and you want to sort of pre-register, then please by all means do so. One of the things that we are going to need is this data extract request. Now, we were quite canny on this one. We had quite a few meetings with HMRC over last summer, and we agreed this real simple process whereby we set up this job form where you can go on, enter your details, sign it, and then when you press submit, it automatically sends that to HMRC from you, not from us. And then what happens is they will then send that to you within 4 weeks. They'll send it to you electronically, so you'll have it as an email, and then you can just forward it to us. As I say, we've put hundreds through this process and not had any problems whatsoever. So unfortunately as well, the team at HMRC, they recognise the form, they know it's from us. So again, where they've had problems, they've then got in touch with us and we've been able to sort of rectify them sort of directly. So one of the last things I just want to go through before we go on to some of the other parts are the McCloud choice and contingent decisions. So first of all, we're now starting to see the McCloud choice. So this is the bit whereby you can get to decide, do you want to leave your benefits in the legacy scheme or do you want to move them into the 2015 scheme? So you will have a deadline of 12 months from receipt of this remedial service statement or RSS to submit your choice. And again, a bit like the RPSS, if you have complex circumstances, you can recover up to £500 costs for getting support via the cost claim-back scheme. Now, again, this is more likely to be in the purview of an independent financial advisor or a financial advisor, simply to look at sort of the considerations of what your pension is, inheritance tax, and all the other things all together. And following one of the cases that we've been working with at NHS BSA, they have actually now launched this early fast track RSS, particularly to help out with second bite awards and transitional tax-free amount certificates, which I'll come on to in a second. So what you'll get in this RSS is nice and simply laid out. Column A, this is what you get if you choose the 95 section. Column B, this is what you get in the 2015 scheme. So you can see what the different pension amount is, what the different lump sums are as well. So you'll get all of that information. And then on the contingent decisions side, so we saw since the introduction of the 2015 scheme, people opted out, they gave up added years contracts, or they left the scheme rejoined as part of that hokey cokey to try and control that pension growth. Well, you can reinstate some or all of your opted out NHS pension membership between 2014 and 2022. You will need to make contributions, and they'll need to be paid retrospectively with interest. And unfortunately, we still are waiting out for a significant amount of detail as to how this is going to operate. However, we do know that there might be some potential support here, and it's going to impact quite a few people. So in one of the surveys that we did, 23% had a period of opted out between October 14 and 22. The cost claim-back scheme application has now been updated and now actually includes this section to say that you opted out and you need some support. So I'm hoping we'll get some more details on that going forward. And then some additional updates. First of all, the 23-24 pension savings statement shambles. NHS BSA sent out a whole load of the 23-24 PSSs, which were implementing the CPI disconnect fix. But unfortunately, they increased benefits outside of tax years. Well, we actually had sight of these calculations late last year, and we actually pointed out that their maths was wrong, but unfortunately it fell on deaf ears on that one. And it was only when they actually came out that it became very, very obvious that these pension saving statements were incorrect. So they're looking to issue some revised ones from the 27th of February. And if you've had any costs because of this, well, you could potentially get a reimbursement. Some details of that are coming out in the next couple of weeks from the 14th of February. And bizarrely, they have said, for those doing a 23-24 self-assessment, you need to calculate the growth to the best of your own ability. if they couldn't do it, they're expecting you to do it. It's a bit daft. However, to help out, and I know we've only got a very short period left, we have put together a very quick, rough and ready free pension growth tool. So again, if you just go to the URL that's on your screen, scan the QR code, you just put in 4 bits of information, and it will give you a general idea of what your pension growth is for that period. Now, the other issue we have is with regards to 24-25 annual allowance taxation as a result of the consultant pay deal. So we flagged this back last year when it was going through the process of the pay deal, because having a backdated pay rise, we have this issue of misallocated arrears because it creates this artificial spike in your pensionable pay, which causes a very real tax charge. Now, we do know that some employers have actually amended pension records to put pensionable pay arrears back in the right year. So there's a number of health boards and trusts that we work with that we actually flagged this before they made the back payments. But it's very much a postcode lottery. Some have done nothing. And we are hearing of some trusts undertaking exercises to get this correct, but I would urge you to just double check your pension savings statement when you get that, hopefully in October of this year, and check your pension record as well. Now, one of the other things is a bit of a legacy from the spring budget that's now having a real impact now for pensioner members, is the changes to the lifetime allowance. So it was scrapped, the charges from April 2023, and the allowance itself was abolished from 2024. And in its place, they built up these maximum pension commencement lump sum rules, whereby you could have up to 268,275 as a tax-free lump sum, or 25% of protected LTA if you had like individual protection 16 or any of the other lifetime allowance protections. And to help out those who might not have used all of that lump sum but had exceeded the lifetime allowance, they introduced these transitional tax-free amount certificates, designed to help the public sector, but have been the absolute bane of pensioner members. So, give an example of why they're useful. If you retired with a £50,000 pension, lump sum of 150,000, well, you've gone over the lifetime allowance as was, but because of the new tax-free cash rules, you still have £118,275 left. But to get this, you have to get a certificate, and you must apply before the first time you take any money out of any other pension, something called the relevant benefit crystallisation event. So the first one after the 6th of April 2024. Big problem in the NHS pension is we have lots of automated what are called second bite pension awards, which is where they make up for sort of late earnings data from employers or from GPs, or late application of inflation to pension awards. Now, you have to apply to the scheme that's processing the new PCLS, and you also have to include evidence of the previous tax-free cash that you took. You would think that was straightforward, but because of McCloud, it's not. If you've not had your McCloud choice, you can't guarantee what your tax-free lump sum was because you could change it retrospectively. So as a result, government said that if you've not had it, you can't apply for a transitional tax-free amount certificate. If you can't have a transitional tax-free amount certificate, you can't have your second bite award, and otherwise you're going to get an overpayment charge. So as a result, loads of these second bite awards were put on hold whilst they tried to work out how they could fix this. We had lengthy conversations with NHS BSA on this and gave them numerous suggestions of how they could go back to HMRC, amend categorisation of BCE dates, how they could potentially apply a compensation scheme so that if you did suffer an unauthorised charge, you could claim it back again, or introduce a fast-track RSS, which is what they have now done. So if this is you, if you're still waiting to get some tax-free cash, then add your NHS BSA to be put through the fast track process, because they can then send you this RSS, they can send you the transitional tax-free amount certificate application form, and also the other forms that you need to complete the whole process and just get it done and awarded. Because we've got lots of pensioner members who aren't getting, for example, the inflation applied to their pension yet, all because they've been held up by second bite. And that brings us to the end of today's session. I hope you now have a clearer understanding of the McCloud Remedy, the annual allowance tax reassessments, and what actions that you need to take. Now, please don't leave it until it's too late. Navigating NHS pension tax rules can be complex, but you don't have to do it alone. We provide expert support for NHS pension scheme members, helping you recover thousands in tax refunds whilst avoiding those costly DIY errors. And best of all, our costs are covered by the NHS Cost Claim-Back Scheme, meaning you can get professional help at no personal expense. Now, for any accountants or financial advisors watching, we also offer specialist support. Our back office administration service helps you efficiently manage your clients' cases through the HMRC online digital service, reducing your workload significantly whilst ensuring high levels of accuracy. So for anyone watching this on YouTube, please do subscribe today to stay ahead of any sort of key deadlines and to sort of get expert updates. Thank you very much for joining. Appreciate your time. I hope you found the session helpful. And if you do have any questions, please do feel free to reach out. Take care and goodbye.